Welcome to the International Arbitrage on the 1st of November 2023. And today we're going to talk a little bit about business trusts. Now, business trusts are very useful for international business, international fundraising in particular, and the reasons are this. If you are running a mining project in Africa or Latin America, and in the next video we'll go into the compliance issues and why business trusts are so important. As we all know, with companies have a remit for shareholder value, as in the board has to maximize profits. They have to do things and everything necessary to maximize shareholder value, and that comes down to a very sort of almost narrow view spectrum of actions that actually have to be undertaken. Now, that's when you have a company. So if you have a company and you're doing a project, a mining project or an oil and gas project, and actually what you need to do is you need to divert relatively a material amount of resources to social impact to make the project work from a compliance, from many points of views, from a operational point of view. There are some directors and financial advisors and independent directors and what have you who would question those decisions and the deployment of capital to such things. And executive management are often sensitive to these things. If you have an international private investment fund, which is even, where it's even more the case, where you do have some independent financial, independent directors, people with fiduciary duties. And if you're raising funds in the US, you are going to have fiduciary duties. It is legally, unfortunately, possible for investors or others to say, hey, why are you spending all this money on social impact, on these charitable causes? What is the return? There's no financial return. There are people who look at things that way. Instead of 10%, it could be 2% or 1%. So, and then the question is, have you breached your fiduciary duties or your contract by over allocating all of these resources to, now under a company, under an international private investment fund that is purely structured as companies or limited partnerships or these corporate structures, yes, that is entirely a possible outcome. Again, it all comes down to communication. To avoid conflict, we have to be able to communicate constantly. We have to be able to communicate between what's going on internationally with what's going on and explain that to your investors in the US who are not on the front lines in the jurisdiction that you're working on. And so that's an ongoing challenge. So the benefit of a business trust to those raising capital from the US but operating non-US projects outside of the US is a business trust gives you much more room to do what is best for the business. Because unlike a company, business trust is, of course, a trust. Its very essence is the law of equity and is essentially an equitable structure. It has fiduciary obligations built into it for the trustees, for the executive, and also a business trust provides you with the management with a greater capability to pursue things which might not necessarily have direct mathematical links to the amount of profit, but ultimately are good for the business and good for all involved, in the best interests of the beneficiaries / shareholders. Because of course, if you have a business trust, the holders of units in that trust, whoever's invested into the units of the trust, they are basically beneficiaries of a trust. The fact that it's used for business, the law of equity and the principles of the law of equity still apply. And so the executives now can feel a lot more, they have a lot more ambit to be able to depart from what may be perceived as the sole focus on shareholder value. They can do things. Focusing on shareholder value is not necessarily what's always in the best interest of the business or the company or the operation. And this is something which people are becoming aware of more and more. Now, a lot of investors, not all, but there's a growing amount of investors, people who are becoming aware that in order to be operationally successful, if you want to have a gold mine in Africa or an oil and gas mine in Africa, your social impact projects are extremely important. Not only important to investors because of the growing demand for ESG, but it's important for brand, the brand of your company, and brand is more and more important in a system which is increasingly increasingly, the financial system is increasingly transparent. And so brand is extremely important. And social impact has a very strong impact on brand, right? And so a well-run social impact operation is something which is easily decided to do and done by a business trust. It's easier for the management of a business trust to do that than it is for, say, executive managers of a company or board of directors to do that. And that is because for the fiduciary obligations is acting in the best interest as opposed to maximizing shareholder value. These things are these are the points that we have to take into account. So, Singapore, for instance, has passed very interesting business trust legislation. There are some notable large business trusts out there. What I will do is in our social media, we'll float some links to the articles that I'm thinking of, where those articles explain how the managers of those business trusts had much more leeway to do things with social impact, which were in the best interests of the business, but not necessarily maximizing immediate short-term shareholder value or returns. So it's important that it's very important that you look into this growing area of business trust. If you're doing oil and gas, mining, natural resources, and these types of things, it is something to think about. The problem that I can see with social impact is not always done well. It's not done well, as in not executed operationally well. The focus on accounting, management accounting, reporting is, at the end of the day, many people sort of approach it from a superficial point of view, but the reality on the ground is that the system is becoming more transparent. The communities and the jurisdictions that you're working in can actually jump on social media and say actually that the things that you might be talking about are not true. We see this in they call it greenwashing, where certain financial businesses have essentially made claims about the things that they're doing, which are not actually operationally true on the ground. So all around, social impact is really important. Business trusts are a great way for to create space to actually execute social impact, especially if you're dealing with U.S. investors, and U.S. investors or persons are not known to be shy for going to court, and so of course you may well be concerned that by pursuing social impact when you have U.S. investors is something that you have to think about. We've talked about this in other videos, just recognizing the differences when you raise money in the U.S. So yeah, business trust, social impact can greatly enhance your brand and greatly help you finding those types of investors. But ultimately, operationally on the front line, the business trust gives you that space to run your social impact operations and do what you said it is you were going to do. The need for good management accounting and real operational execution still remains, but like everything else, the business trust is a useful tool for the international non-US manager who is raising funds in the US for a non-US business. Cheers.